Hi guys, we're back. Roy Cousins here. We did another market video analytics session, one of our top class market analytics that we're having every Tuesday. So if you haven't already registered and subscribed, you better do that right now. Today I'm going to follow up on a session that we had on the 13th of November, right? It's pretty much about 20 days ago. Title was Crude Oil, Preparing for the Last Downside Stretch. I think it was a very important session. And I got tons of questions from you guys asking, just following questions with regards to market action and what's to come. So I gave it, 20 days for things to roll on. I think it's a very critical moment right now, so I really want to touch base and share with you my insights with regard to crude oil, because I'm really close to pulling the trigger on a new bullish position. We were on a bearish position for quite some time, and I said that I'm about to flip over, but I'm waiting for the right moment to strike, and I think that right moment is right around the corner. So it's going to be super interesting. Stick around. But before we dive into the juicy stuff, I want to talk about one more point, which is really interesting, by the way. Let me take you to the Liteforex broker website. I want to show you something really cool. Alright guys, I wanted to take 2 minutes to talk about this really cool contest that Liteforex broker is about to launch. Right? It's about anyone who feels that he understands the market, he can read the market, he can analyze the market, he has good convictions for the most part, and he wants to share his wisdom with the world, but he only needs a platform. Well, guess what? Liteforex broker is about to give you that platform to show the world what you're worth, and that's actually the name of this contest. It's called the Show Your Worth contest, right? And it's really easy to win $100, for the first step. Yeah, like really easy, super easy. All you need to do is register, and then you make a video review. It could be a review, it could be a, any type of forecast or a video lesson, or even a video analytics session like this one, right? You publish the video and boom, you win $100. Now, this is just the first step, because if you're actually good at this, if you're really good at this, then there will be a jury which will pick the best one, right? And the best one is going to win a 3-year contract with Liteforex broker as a blogger that can, publish and share his views on the market. Pretty much what I'm doing here right now. So how cool is this, right? I mean, go ahead and register. It's really super easy. Don't miss out on this one. All right, guys. So are you ready for some action? Let's take it to the chart. Now, look, I really want to stress this out. Go ahead and look for that video session that we did 20 days ago, right? Where market was preparing. It was basically in a meltdown. I mean, I'm talking about the price of crude oil. 20 days ago when we had that last touch base here, I was actually I was having a very profitable position in place, a bearish position. I was able to grab $15 from if I recall correctly, it was from 74.75 all the way to 59. And at 59, I got out. And then I started to prepare for the last stretch as I saw it. I also started to prepare to flip over, and that's just according to the big picture, which, by the way, I'm going to touch base with, don't worry. But, it's really interesting to go back and see what happened here, because if you remember, and if you don't, go ahead and check it out, by the way. But I was pointing out 2 important key levels, which were a Fibonacci analysis that I've done here, because I wanted to know how low is that move going to go, right? I wanted to know where is going to be the tipping point where I will be able to pick up the oil and take it for the next upside move, just according to the bigger picture right now. So I was trying to time this downside correction. And what I found was an interesting cluster. It actually was a hybrid cluster with these two key levels. Take a look, the 57.33, right? There's 57.35, basically, and the 55.95, which you could also call it the 56, right? These two lines. Now, this one was the first one, right? The 57.35 was a 38.2 correction, Fibonacci correction for the previous, for this whole upside segment, right? The previous upside segment, upside trend, if you will. And the 55.95 was a 1.618 Fibonacci projection key level applied on the last opposite move, right? The last opposite move, which was this one from the bottom to the top. And when we saw that cluster, what I said was that in order for me, I thought, to be honest, I thought that price will find bottom right here on that range. I thought this particular cluster would actually be able to completely break the negative momentum and reverse the whole move. I was wrong, right? Price definitely outlasted my prediction, but I did set a very important condition to establishing a new bullish position. I specifically said that the only condition that I'm gonna have is if price gonna spike the 55.95, meaning it's not gonna close, and I'm gonna take you to that week. Take a look. It's this bar right here, this one, right? So I said if price is just gonna spike that 55.95 but not gonna close below, that's gonna be the first cue. The second cue would be if price can show that it can actually break above the 57.35 with a weekly close. That was the trigger. That was the official trigger. And guess what? It did not happen, right? Price did, it actually met almost all of the details in the condition aside from the last one. So it did spike the 55.95, it did went back, closed above, and then it started moving upwards just according to that scenario, even touched base on that 57.35, but obviously you can see it bounced back, closed below, and completely collapsed. So I just kept standing on the sideline, right? I didn't take any action because that was my main condition. I knew that in order to determine a genuine upside turnaround, and we're talking here about a full-fledged upside reversal with the potential to take the previous major high at 76, guys. I'm talking long term now. But, you know, I'm always interested in the long term because from the long term I can always take also short-term positions according to the long-term conviction, right? So I really like to mix them up, but the first thing you want to have is a solid long-term conviction. That's the basics. Really, that's the basic for everything else. So I was trying to time that downside move, and when I saw that it's not going to be the case here, I knew that I had to sit on the sideline for quite some time. And basically what I did, and this is quite interesting, I reanalyzed the whole situation. Now, before I go to the reanalyzation here, which, you know, it's quite interesting, it kind of replicates the whole previous analysis. When we had these two key levels, I actually found another set of two key levels. Really fascinating stuff, guys. Another cluster, a second cluster, which this time I believe would actually hold, right? So you've seen the previous cluster, these two green lines, right? That was all about the previous session at you know, that was done at the 13th of November. Now today we're talking about the new cluster, which is right here, this blue dotted, two blue dotted lines right here, the 50.30 and the 51.35, right? Just 1 point differs between these two key levels. But before I'm going to talk about the reanalyzation that I've done here, that was probably about a week ago or 2 weeks ago. I want to show you the bigger picture just for a second here, because just to refresh your memory, of course, the bigger picture suggests the following, that we are looking at an upside trend, right? That's pretty obvious, that had been developing in 4 segments, or you can call them waves, and you can already sense to what I'm getting at, right? We had 4 segments with the first, the second, the third, right, and the mighty fourth. This is a classic Elliott wave formation, really classic one, where the fourth is much more intense. That actually happens more often than you might think. The fourth is the aggressive move, and it tends to take the tip of the first wave. I know this is not part of the principles that you would find in the literature if you'd go search. And you know, here's the cool part, because whenever I have this type of situation where I was waiting with a cluster for price to react and begin to turn around for me to take action, and it didn't happen, price just continued through, I quickly reanalyze the situation and I look for a second cluster, right, a deeper one. And here's what I found. Take a look at this. This is really fascinating stuff, guys. I just measured the same move again, right? I measured the same move, but this time I was looking for, I'm talking about the last upside trend, right? The last upside segment from the very bottom right here. Let's be more clear. From the very bottom to the very top. And what I placed was the last Fibonacci correction level, 76.4. Guess where that falls? That falls right here, 50.30, right there. Now, measure the whole move, right? The whole 3-segment move from the very bottom, right, to the top, and you'll find that the 50% Fibonacci correction, 50%, falls exactly at 51.35. Just 1 point between these 2 key levels. So I knew that I am possibly looking at a powerful, very powerful range that could, a support range in this case, that could, this could actually be the one to break the downside momentum and obviously reverse the whole move, setting the stage for the 5th, right, impulsive wave. The 5th impulsive wave, guys. That's the last one, and it should take the previous major high. That's how profound, right, this particular technical picture is. Now, here's what I found. Let me show you. I'm going to zoom in a little bit, right? So, what happened here was price went straight to that 50.30 level. It actually happened in 1 week, right? The same week, it completely collapsed from 57.35 all the way to 50.30. And it actually kind of closed below that level, right? And to be honest, at that point, when I saw that weekly close, I was a bit confused. I thought to myself, maybe this is not a classic Elliott wave formation where we're going to have the 5th impulsive wave, but maybe this is a complete downside reversal, I mean, on the grand scale, right? Although I wasn't expecting it, anything is possible in the market. We know that already. But I did want to continue to follow up, because I knew that maybe the monthly bar, right, the monthly close has something to say about this. And lo and behold, take a look at what happened when the month closed. I'm talking about just 4 days ago, right? When November closed, take a look at the close. This is really, really fascinating stuff. I mean, price, as you saw, was well below 50.30, but it just left a spike and it had to go back and closed above that level. How weird is that, that the following month, basically the beginning of the month, the 1st of December, had started with this really bizarre gap right above the 51.35. This is crazy, right? I mean, price just gave us the most astounding proof, right? Evidence that it acknowledged these two levels. First, it did that right as the month closed, November, last month, with that engagement, this really nice engagement here on the 50-30, and then gapping above the 51.35. Now, I have to say this, even though it did gap above the 51.35, and the 51.35, guys, I have to make this clear, is the trigger level, just as it was in the previous occasion, right? When all I demanded was a reaction to the 55.95 and then a weekly close above 57.35. That did not happen. And you know what? That did not happen here as well. Although it may seem as it did, it didn't. We didn't have a weekly close yet above that 51.35, although you can see how price begins to move away, right? Begins to build up some really interesting and I mean, positive momentum is off the roof right now. But this could be a trap, right? This is why I always, when I engage with the bigger picture, I always require to have a weekly close, which is a high authority of confirmation, right? Technical confirmation. Now, this may actually be a trap, and I'm going to show you why I think this may actually be a trap. And I'm going to have to take it to the daily chart and show you what's happening on the lower, on the local scale. But price gapped above 51.35, but it doesn't mean it's going to stay there by the end of the week. What you see here may actually be a bullish trap where price will come back and close yet again below 51.35. And I think that's probable. I think that's probable because I think what's happening right now is pricing is engaging with a very tight trading range that we can take from the local perspective. Take a look at this particular frame. So I'm taking you to the daily chart, right? And here's what I found really interesting. Take a look at this black system, the C matrix here. I'm trying to pinpoint a potential trading range, right? And it's very probable. We already have the first leg followed by the second leg as it touched base on the lower section, the minimum level, the minimum mid-low level, and went straight. Take a look at this move, straight to the top key level, 53.34, right? This is a local system, guys, depicting just the very recent price action. So I think it's very probable that although price seems to be challenging that key level, that top key level again, I think it's probable that it will fail eventually and lead the way to another downside move, just another short-term downside move back to the lower section. And only then it will reverse again with a leg that should be the fifth one, right? The fifth leg that is more likely to break out, and in this case break up above 53.34. So, like I said at the beginning of this video session, I am with my finger on the trigger, ready to pull, right? But I'm waiting for the right moment, right? Fine-tuning right moment to strike, and it has to be related to this particular level, 53.34, with at least a daily close. That's going to be a good enough indication for me to establish a very small position, because I don't want price to, you know, completely move away from where we're trading right now, which are really good levels to pick it up from, right? Very cheap right now. I don't want to see it, you know, by the end of the week at 60, and it could happen. So probably my first condition to just open a small position, just to test the water, so to speak, is for price to break above 53.34, which it proved to be difficult just yesterday, right? Take a look at yesterday. However, only when we have a weekly close about 53.34, I will engage with serious attempt to increase the position significantly. And I'm going to aim at the same very levels that I was waiting for in the previous attempt to grab the bottom. Remember that same two levels, 55.95 and 57.35, are going to act as price targets, secondary price target. Later on, another important price target will be the 60.85. The 60.85 here is the 1.236, another important projection, Fibonacci projection key level, when it was applied on the last upside segment, on the last upside move, the previous upside move, from the very bottom to the very top, 1.236 right here. So even though I was using these levels to project on that downside move, I can still use them as potential resistance on the way up, right? Because long-term perspective, we're talking about a huge move, potentially can take the previous high. I mean, if you're going to have here the fifth wave, that's the nature of this formation, right? It's going to take, I mean, it's going to take time, no doubt. It's not going to be as quick as we saw that fourth move. It's not going to be as intense. It's going to take time with corrections and stuff like that, but eventually it will take the previous major high, guys. That's the implications that we have from this technical picture. So I think I got it all in. I hope I did, because this is pretty much my game plan. Straight up, guys. No filters. This is my game plan for the crude oil. After making I've made a fortune here on the way down. Hopefully, we can do the same on the way up again. All right. I hope you enjoyed the session. Don't forget to check out that the last one, the last one we did on the crude oil from the 13th of November. And subscribe to the channel. Follow us on a regular basis every Tuesday and every Thursday. That's what we do here. And as you can see, it's super interesting stuff. So we'll see you in the next session. And in the meantime, I will say goodbye.